It is another volatile day in the markets with crypto weighing heavy. We have new all-time high for Amazon, some tech companies getting a little bit of a pullback. We'll be discussing that and everything else today on Money Never Sleeps. Welcome back, everybody. As we get going, do us a favor, like, subscribe, and remember that nothing that Kevin or I say is financial advice, so please do your own research before making any sort of investment decisions. Kevin, we got some rather shitty new home sales data today. The U.S. government moved over a bunch of Silk Road Bitcoin to Coinbase to, what many are assuming is cash that shit out. I love that they're cashing out on the same site that they're suing, but we've talked about that before. We have Amazon trading at an all-time high. We have more inflation issues globally. How are you doing today, and where do you want to begin?
I'm doing great, man. I think I said it the other day. Can't apply logic to the equity market, but you certainly can do it to the monetary system. We're seeing some major cracks globally, right? From banks in international markets to right here at home with the consumer. I mean, pick your poison at this point. I'm feeling pretty good, but I think that we should touch on that home sales data because that's outside of commercial real estate, which has been a disaster and it's about to get way worse. This is probably the first major crack we've seen in home sales. And this is a big point of not only why rates are too high, but also that consumers just have no money whatsoever.
Yeah, so let's give a quick rundown of the numbers that came out today. New home sales decreased by 11.3% to a seasonally adjusted rate of 619,000 units last month. So that's over a year period. In addition to that, we did see the April number revised higher, but this number is pretty low, and it's the biggest percentage drop since September of 2022. So the housing market showing some cracks here. We've also seen that foreclosures are on the rise, which we've been discussing for a while. And, there's a lot of issues here, right? Like when people have been taking out mortgages and at like home values were absolutely insane. People taking out mortgages with those values start to come down. All of a sudden, a lot of people are going to be underwater on their mortgage, right? Like the value of their house is no longer going to be adequately represented in their mortgage rate. So that is an issue. We also have supply at a 16-year high. What I saw just recently, more and more people are starting to list their homes, whether it's because, we don't know the reason behind that, right? It could be that, they're trying to move into a bigger home like I'm doing, but I don't have my home listed because I ain't taking on a 7% mortgage. It could be that they just cannot afford it anymore. And that's the biggest problem. And as I spend more time looking at the market in my area, trying to research where I want to live, I'm seeing more and more houses that have been on the market for 60, 90, 120 days that have slashed prices 2, 3, 4 times. And it's just showing that there's more and more strain as we see layoffs continue to slowly but surely increase, as we see inflation continue to run hot, whether it's on food, energy, insurance, all of these things, the prices are not decreasing the way you think that they would if inflation was coming down the way the Fed is painting it out to be. So the housing market issue, and at the same time, there are people like myself who are waiting to upgrade and to move into a bigger house at the right time. And I think that will help alleviate the problems at some point. But it's, can people survive until that point with the Fed keeping rates this high? Because let's say we don't get a good inflation reading on Friday, and let's say rates remain elevated. I'm not going to be rushing into something just to get, to still be sitting at this 7% rate, because we don't know when and how much they're going to cut. So it's a really scary and uncertain time for people in the housing market. I will say, if you've been considering buying and it's something that you weren't sure if you wanted to do, continuing to save up money and look for possible, whether it's to live in or to invest in, but continue to save up money, stack cash on the side to take advantage of a potential housing market collapse is not the end of the world, because these big investors are doing it, right? Like that the Black Rocks of the world are going to keep trying to buy up houses, and it's tough to compete with them, obviously. But if you can do it, there's a reason why they're trying to do this, because they know that real estate is a good investment most of the time.
It's a good investment when it's a great entry, right? I think the entry price obviously is going to be coming down a lot harder and faster than people probably expect. I think this is going to be a recurring, not theme, but a recurring thing in the data where we're going to continue to see, new home sales just drop significantly. Kind of segueing into what we're seeing globally, both in Australia and in Canada, as Canada especially is wild because they are doing rate cuts. Inflation went up again.
Yep.
Month of, um, there's only one way you kind of solve that, and that's with mass layoffs, right? That's to the point where you bring inflation down, you slow the velocity of the dollar or the loonie or whatever your currency is, and you bring that shit down to the point where it's like, okay, maybe some of these prices are reasonable now. And since we brought these rates down so significantly, uh, in order to fight this mass layoff, because people have gotten to the point where they're just not spending money or in a deflationary period, that's when you start to see, some of this money, new debt that's created and allows people to find jobs. And you start to see some of these houses go at a decent price, especially when it's at those really rock bottom prices. But again, people being laid off, likely the first thing they're going to sell is what their most of their wealth is probably tied up into, and that's going to be your house, right? Especially if you're in some of those markets like Canada. Absolutely, that's just a fucked up housing market scenario, mortgage crisis that's going on there. There's going to probably be a lot of money that you could draw from that if you're able to sell, but if everyone's kind of doing it at the same time, that's a fire sale. Supply with no demand, that's a fire sale every single time. So that's something that we have to kind of watch out for. It's going to be really interesting. But like I said, with inflation coming down as the central banks are inflation going up as the central banks are cutting, that's so problematic. I mean, there's only one thing that's probably going to bring it down. And I said it's layoffs. And I do think that layoffs are going to continue to rise going into at least the end of the year, maybe even increase in the year or so afterwards too, because we know that people are going to try and get lean. We know that most of the layoffs that did happen from the 2008 great financial crisis did come in 2009 and 2010 as well. So I still think we have a really rough road ahead of us, and it's probably going to come in and play into the housing market over these next 2 years, offering great opportunities if you have that cash. But at the same time, it's going to be super problematic for people who are trying to get money out of their house. I think their home values are going to continue to drop when they need money the most.
Yeah, a couple things. First off, happy hump day to you too as well, Ace. Thanks for joining us. Two, I can't take you seriously as a country if your currency is called the loonie.
The
Get
loony,
your
I
shit
know.
together. I mean, that is absolutely just so
You know what's
stupid.
funny?
Yeah, go ahead.
I think the loonies their dollar and their coins are called toonies. I'm not even shitting you with this. This is
How
why they
is
can't win the Stanley Cup.
countries not? Yeah, Canada's not a real place. That's why they can't. That's why they haven't won the Stanley Cup in 3 decades, because they don't have a real currency. They're paying people
Exactly.
loonies and
The
toonies.
queen's still on it.
Absolutely ridiculous. Okay, let's move through the market, kind of look at what is going on. I want to go to Amazon before we hit crypto.
Yeah.
Amazon trading right around an all-time high. Some news today from them that they're launching a discount section to compete with other discount online retailers. Going to be shipping straight from Canada. So if you want, or from China, I mean, we just talked about Canada. If you want to get those Chinese microplastics, then definitely start hitting up that Amazon discount section. But it has driven the stock up, currently at 193.5, over a $2 trillion market cap for the first time in the history of that company. So pretty wild there. I think they also mentioned something about AI, so that's gonna shoot valuations up. But Amazon kind of one of the stocks leading the charge today.
Yeah, absolutely. And I think that it's kind of interesting because obviously this is good news for them. But at the same time, it also shows you the health of the consumer. Somewhat, you could argue, right? You can make a case for anything when it comes to data, right? You can say that this is bullish or bearish for the market, but nonetheless, the price did shoot up, and that's kind of what we want to take a look at. Now, I want to take a look at the technicals first because I thought that we were going to put an ABC correction. Still possible, but since we put in a new high, if this is an ABC correction, then probably have to do something more like that. So maybe Amazon doesn't get hit nearly as hard as some of the other stocks that are like Nvidia, Apple, who
I mean,
are.
is this Amazon's way of like kind of giving us a little more indication that they're expecting times to be tough ahead for your average consumer? It's like, shit, we know we got to get more people buying our stuff. So let's do it on the cheap because no one's going to be wanting to pay full prices when they're broke.
That's the case. I would say that this is bearish, news if you want to take a look at it that way too, right? Um, and I think it is, but I think that also right now you're seeing a lot of capital rotate out of some of these large ones. I mean, you can see Nvidia 14%, 15% in 3 days, and then we'll talk about that in a second. But then you're seeing some of these stocks that are just like, well, let's see if these are going to get these blow off tops. And there's no reason why Amazon shouldn't. Amazon's also doing extremely well. It has been doing extremely well this entire time. I think a lot of people are still going to shop on Amazon, still get some really good deals. Prime Day's coming up. But looking at this in terms of, structure, if this is an ABC correction pattern here, then obviously we are looking at something where it doesn't go nearly as low as it did back in what is this, January 2023 to start the beginning of the year. Or I could be dead wrong and we just are, in some different type of structure, which is going to be pretty pretty much what I think could happen, especially if we continue to push up higher. And then we're seeing we're in a 5 wave. My main concern here amongst a lot of this shit is that when we look at this on the daily stochastic RSI, we're pretty close to being extremely overbought, right? Let me just pull this up. We're at 90 and 90. So, I mean, 100 and 100 obviously would be, bonkers, fucking stupid, extremely overbought. Let's take a look at the Bollinger Bands. I haven't looked at these in a while. And let's look at this on the weekly. Yeah, so you got to be careful here with Amazon on the weekly. The Bollinger Bands are contracting pretty tight. You're riding the top one. If this were to, be negative in any way or you see any type of negative price action, there's a good chance you could see this break down below the 50 moving average. But that would be a massive move. We're talking about something roughly somewhere around 17, 18% drop. Some very similar to what we saw with Nvidia. But I think that we're going to continue to see maybe for the next few weeks Amazon stay extremely overbought or above the 50 moving average, so it makes no sense necessary to short it. It just seems that it's still extremely heavy on the daily, and we're seeing this very similar things going around with Apple as well, right? Apple is extremely heavy. Looks like there is room for it to push up one last bit, and that's why I think we're going to see rotation of capital from a lot of these large cap stocks going into some of the ones that maybe have one last chance to push up. It's funny how Nvidia was the world's wealthiest company at one point, and then we just saw in the past 2 days like $800 billion worth of just like capital just swing back and forth, which is hilarious because we saw sell off, buy back, selling off once again. I think that's just kind of going into these top ones. I mean, Tesla, very same thing, right to the 50. This is actually the 200 moving average, and you're extremely overbought on the daily. So a lot of these tech stocks, I think, are just moving money back and forth, especially since we know that the buyback window is closed out right now. So you could just be seeing them play this game of back and forth money. How long will this last?
Nothing matters until Friday. Like,
exactly.
We're just kind of talking it like we're just giving a recap. It's like there's nothing actionable until we, I guess the action is if you got a strong feeling about what direction inflation is coming in on Friday, then you could try to enter a position. But until then, like, we talked about the scenarios on Monday, whether it's coming in at expectation, above, below, like, and with what we've seen out of, was it Canada and Australia where inflation came in pretty highly over their month over month and their expected number. Like, we're a different economy. Everything, we can't, just because it's happened there, it doesn't mean it's going to happen here. But if you've been like, oh, we're on this downward trajectory, it's down only on inflation, so it means up only in the markets, pump the brakes a little bit. Having high leverage going into Friday could be a bad setup if you are wrong. So, good luck there.
Yeah, and I'm just pull up oil right now because PCs and this data is going to be super important. May was a down month for oil. However, look where oil is right now. So even if you get some type of relief, what's to say that not a month later we're going to see inflation run hot again, right? There's a good chance that even oil could rally into the end of the summer. I still think that something could happen to the point where we get a blow off top in oil, just because how much we've rallied from that low. And after that, we could see an absolute collapse in oil. It's very possible, but that collapse would probably come somewhere around, I don't know, September, October or so, at the beginning of that. But yeah, I mean, this data right now, it could go honestly either way. I'm not necessarily sure. The month of May was a really weird month. I think that there's more of a chance that we are going to continue to see inflationary numbers, but I don't necessarily think that's inflationary for all, consumers. I think it's more deflationary, especially if we continue to see job cuts and when we get that data as well. So this is a really weird place in the market. It's a dead week. We're starting to see volumes drop significantly. And I think there's a good chance that even though everything's kind of quiet in the summer months, something could bring volume back. And I think a lot more people are going to be at the trading desk later on. So I'm not sure necessarily what we can say until then. I think you said it probably best this week. It's going to be kind of sideways chop until we get clear direction of where the market wants to go. And it's probably going to be one major reaction and then the opposite in the days that are following that trade.
Yeah, and one thing that could definitely impact the direction of that and intensify the move was the government sending $240 million worth of Bitcoin to Coinbase from what they confiscated during Silk Road. So we've seen Bitcoin take a little bit of a hit here. We're giving back most of yesterday's gains. We're still above 60K for now. But I bought a little bit of Bitcoin on Monday thinking, hey, I think this is a good time. We'll buy some of this fear. Nope. Definitely wrong on that one. We're on our way back down to my entry point. And this is, once again, if we see bad inflation, the move on Bitcoin is going to be down heavily, which, hey, it's another buying opportunity. I'm still bullish on it in the mid and long term. I guess something else could be the debate tomorrow. If there's going to be, if anything can be, gleaned from that ahead of the inflation number. I mean, the Friday open could be absolutely wild between what happens during the debate and what happens with PCE.
Oh, 100%. This is and also it kind of makes me wonder if PCE was coming out or if the debate was picked for this day for a reason before PCE.
I don't think so. I don't think it's that deep, player.
All right, maybe not, but it seems like it just always happens to be where it's going to be neutral for those events. But looking at Bitcoin right now, and you actually said something about the markets as well that reminded me of Japan, which we'll touch on in a second. Yeah, this is kind of my concern now. You found support on the 200 moving average, but now you're trapped between the 50 and 200. So what's going to happen here? Are we just going to coil up, kind of go sideways until the market gets direction? We'll have to see. But you can see as of right now, this parallel channel that we were trading in is acted as resistance. Unless we can break above that, we can test the 50 moving average. You're probably going to stay within this range of 63 to 57.9 or so. I think tomorrow could offer a pretty good indication that both candidates are bullish on crypto. Maybe you can break above it, but volumes again extremely low on Coinbase. But daily stochastic RSI extremely oversold. Doesn't mean that we're gonna break up to the upside at all.
I mean, look how long was it overbought right there? Just to give, because right before this, it was overbought for what? So it can stay there
30 days. Yeah, 30 days or so. So it can stay oversold for a period of time too, until it hits its target. You guys know where my target is for this. I think that if you lose that 200 moving average, you're $17. Yes. I have 50,000 orders ready to go at $17.
We'll see you at zero.
I'll see you guys at zero. I mean, if it goes to zero, it's at least free Bitcoin. But 52K is where I think is going to be the major level of support. If you lose that 200 moving average, I think you're going to see a lot of people try and catch the knife right around here, and there's probably going to be pretty good support. Makes sense to me that a lot of these bids will be around there. But just because something is also oversold doesn't mean that, Bitcoin's oversold doesn't mean that alts are going to follow with it. If we look at a few alts, I'm going to look at Matic here. Matic's getting close to overbought, and it hasn't really done shit. I know. So, some of these technicals may or may not matter.
Word can be overbought.
Look at AVAX. Looks like it's coming out, but Are we talking about dead cat bounces in some of these scenarios? I think so. I think there's a good argument to say that there's going to be a dead cat bounce for a lot of these things, and maybe it pushes up a little bit, but I don't think it's going to see that type of giga volume that we were seeing a few months back when the ETFs are coming around. I think this is more of like, oh yeah, let's just buy the dip, and then the dip bounces a little bit, and then guess what? There's no reason for anyone else to buy, so they just sell and they dump on people, liquidation. I think the altcoins are kind of giving away what the crypto market might be seeing fairly soon. And by crypto, I mean the TradFi crypto market, which is Bitcoin and Ethereum. But looking at a lot of these across the board, I mean, so close on Link. 15 to 200 moving average, close to a death cross. But then look at the stochastic RSI. It's getting close to overbought once again. And it looks like it's just a little bounce. We're not
Oh,
really doing
God.
that much work over here.
I'm about to round trip the Link I bought in December of 2022.
You're probably not worried. You're probably going to be upset about this Sol trade too. Solana's volumes has just absolutely dropped off, and this is on Coinbase. I believe it's on Binance though, but it's like there's pretty much no trading whatsoever going on with it. I think a lot of the institutional players that had money in Solana bought it at 8 and they sold at fucking almost 200, right? Or where was it? It was close to 200. Yeah, it was at 210. Just think about where we were. We were at 210 back in March, and where we are now, we're 35% down on Solana. And now you got the figure between the 50 and the 200. You're going to see this play out. Maybe you get a push up to 150, but if it doesn't, and this 200 doesn't hold, you're going to be looking for support further down, maybe around $100. It's going to be a very volatile time, I think, for alts coming up soon, and we shouldn't be surprised. XRP, what are you doing down there? Just kind of doing your own thing. Looks like, I don't know. It just doesn't look very good for the alt market right now. Dominance is still relatively weird, but I think it's just because USDT dominance is being such a bitch up here. It's so strong. So we'll keep an eye on that. Let's wrap up with Asia today, because I think that's going to be the most important thing. And we're seeing the devaluation. Let's see, Ace. Did you see the episode what Capo tweets? I swear every time he says he's buying the crypto. Yeah, dude, I don't hate Capo one bit. I respect his TA and his balls that he goes out there and makes these wild claims. And sometimes he's right. He was really good at the bear market, but I completely disagree with him here. And the reason is you can't use TA in a situation when the monetary policy and monetary system is so ass backwards to the point where there's just no debt being created, right? It's easy to make these calls when there's still tons of capital around 2022 going into the June low. Now, absolute chaos has ensued. We have banks that are failing. And speaking of banks that are failing, we know the Norwich going, and I can't even pronounce it. So I'm just going to call it Noro in Japan, because that's literally the first 4 letters of it. Bank in Japan is just eating shit. And a lot of that comes from what's happening with the yen. Last night, we crossed the 160 mark for the yen. So now they intervened back here, and they said they're going to intervene at any point 24/7, and now it's at a higher high than where it was back in April when they intervened and spent like 60 billion yen or some shit like that to save the markets. They're not doing the FX interventions right now. This is a very drastic level. This is literally terrible. If you continue to see inflation be problematic too, which you should if the yen is getting this weak, then what are they going to have to do? They're going to have to raise rates. But the funny thing is, because the yen is getting so weak here, you're seeing the Japanese equity market just fucking rally. All right, too many lines. Forgot what I was doing last night. Too many lines here, and you're seeing these massive rallies because the yen is just getting weaker and weaker, right? This is not going to end well, because the higher that these values go, when they have to solve some of these assets, it's just going to plummet way faster. And that bank, we know there's a lot more banks now that are seeing problems in Japan, but the main bank, they hold tons of derivatives for other institutions globally. So if you want to talk about a derivatives market that's just going to absolutely get destroyed, it starts with them. Everything from CLOs to, if you want to talk about Chinese equity and their property market as well, you can say anything that Deutsche Bank or any of those German banks have exposure to, all tied up right there. So the exposure that bank will have if they sell off a lot of their debt, and you see that they're in a fire sale and they actually go tits up, which is possible. Any bank that could happen to at this point. You're going to see the fallout and the fire sale that just absolutely ensues. And the one thing I'm looking at with an EK right here is this is potentially an ABC correction. That's what I was doing last night, something like that. And we're getting pretty close to it being overbought. You can already see that it's very close to being overbought. What I would anticipate is that we have some pretty good move to the downside, which would be intervention or they hike rates and you end up somewhere around the 200 moving average. Do not think it stops there. I think it's going to be a lot more brutal for the Nikkei, but again, that's over a period of time. But since the yen is getting weaker, the dollar is getting stronger, and the Japanese equity markets are just continuing to rally, it won't happen forever. Last thing I did want to talk about was this here, NVIDIA, and how much this is just fluctuating back and forth and how much volatility we're seeing, but the S&P is not reflecting that. This is a very dangerous place. We're seeing literally hundreds of millions of dollars and just market cap just being just thrown back and forth, its weight. And I think what we are going to see is probably going to be something very similar to a dead cat bounce if the conditions are right for, inflation coming in a lot hotter and the market just don't react to that as well as they once did. This is another one that was stupid with a lot of people are buying this back thinking, maybe it's going to go up higher. I'm sure they're going to do the same with Chipotle now that it's got its 50-to-1 reverse stock split. So people are going to buy Chipotle think, oh, this thing's going to go up to 2,000 again. Probably won't. But it's a great way to fool retail into getting in on this. But I think that we are going to see this kind of bounce here. And then I think we are going to pull back to at least the 50 moving average. But again, you lose the 50 moving average, it's game over for this, in my opinion, till you get to the 200. And think about the amount of losses you could potentially see here in market cap. If you want to go from the top of this all the way to the 200, that's a 44% pullback in the market for NVIDIA. I will say this too. The RSI, not the stochastic, but the regular RSI is around 8760, and it was at 8780 the last time we saw the height of the market for NVIDIA before I saw a Jurassic pullback. That was, I believe, in 2022. Let's see where I can find that. 2022, yeah, like right around here. All right, so November 2021, this was right where the RSI itself was at 8780, and what we saw in the months that followed was, I believe, a 68% drop in the market. Was I right? Yeah, 68% drop in NVIDIA. And again, this is from November of 2021 all the way to October of 2022. So it took about a year, but nonetheless, I think we're in a very, very much different place than we were in 2022, if not worse. So, do that what you will. I think this is more similar to something that we saw back in 2000 if we see something break between those 50 and those 200 levels of support. So keep an eye on those. I don't think that what I should say is the S&P should react if it does pull back that hard. We're just not seeing it right now, despite the amount of volatility that's coming from NVIDIA. It should be reacting a lot more, which means the VIX should be reacting a lot more as well.
Yeah, I mean, Amazon, Tesla, and Apple are keeping it up today. It's pretty much flat on the day. It comes down to Friday, right? Friday's a big PCE reading ahead of the next Fed. So next Fed FOMC meeting. So that's what it's going to come down to. That's going to do it for today. We are not going to have any more shows this week. Kevin and I are both traveling on Friday. We'll be back on Monday to recap PCE data, the debate tomorrow night, and anything else that is going on in the market. So appreciate everybody for joining us today. If you haven't yet, like, subscribe, comment, tell us we did a good job, tell us we did a shitty job, whatever. It all helps the algorithm. Appreciate you guys so much. Have a great rest of your week. Have a good weekend. Stay safe out there, and we'll see you on Monday.
Take care, everyone.